This is the seasonal stock and ETF report for today, December 19th, 2022. Last week of trading before Christmas time. Alright, let's first take a look at S&P 500. We go to Indices Common. We go to 80 years. There's one short-term opportunity on S&P 500. Take a look at that. S&P 500 for the next 19 days, today until January 4th, in the last 80 years, has gone up 80% of the time. Let's look at the details. We click the right arrow to see the detailed stats. So out of the last 80 years, S&P 500 has gone up 64 out of the last 80 years, or 80% of the time. It has gone up an average of 2.37% in 19 days. This is a 19-day opportunity. So it sounds like we're really bullish right now. Last year, the same date range, which is December 17th until January 4th, made 3.74%, and the most it's made, it's this big one. In 91, it made 9.2% in 19 days. So we are showing that generally bullish for this date range. Look at the losers. Even the years that lost, 2020 lost 0.59%, 0.55%, 1.43%. The biggest loser was 1968 at 3.93%. So next 19 days, it's generally bullish for S&P 500. Let's go and look at our stock groups. First one, Dow 30 stocks. United Healthcare is a long-term opportunity. Very good sharp ratio of 2.18. We like that. It's a great longer-term opportunity from today until July 17th. United Healthcare has gone up an average of 15.66% in the last 10 years. So this is a good long-term opportunity, but look at that. Caterpillar is a short-term opportunity, 16 days. Last 10 years, it has gone up an average of 3.05% in 16 days. That's today until end of the year. JP Morgan is even shorter term, still a very good sharp ratio for such a short-term opportunity. Amgen is a longer term one, but that's a good long term. And Visa, 11-day opportunity is an average of 1.82%. In 2021, this date range made 4.52%. That's today until December 29. Microsoft didn't do well last year, but it's also a good opportunity. Merck, Apple. Okay, what's on the top of NASDAQ? Analog devices is on top of NASDAQ from today until June 7th. AstraZeneca, Amgen, Comcast. Comcast is also on the rise. S&P 500, top on the list is still Church & Dwight. It's been on the list for a while. Look at that sharp ratio. This is only 9 days and the sharp ratio is 3.33. That's pretty awesome. How does this thing look last 35 years? The last time this date range didn't work was 2007. It dropped 1.41%, and 2005 dropped 0.5%. We can also subtract 6 years to get rid of these older ones and drop these losers. So if we drop 6 years, go to 29 years. or 28. I don't subtract well. So if we look at last 28 years, it's only lost in 2005 and 2007. This is a good date range. This was the loser. That was after a sharp rise. But it is followed with a pretty, not so steep, but a down trend until mid January. Right there. Newmont, Cooper Companies. Oh, we didn't wait for Republic Services. What's on the top of Russell? Same thing. Followed by Sienna and Wilshire. Same thing. The third one is Mastacank. Look at ETFs. We have 4 11-day opportunities, one after another. First one is emerging markets. Second one is emerging markets. FTSE ETF Vanguard and All County Asia Japan iShares. All 4 are 11-day opportunities. They are making an average of 1.45, 1.69, 1.66, 1.75%. Followed by silver, which is on the rise also, has gone up in the next 50 days 5.12% in the last 10 years. Okay, that's it for today.